Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So sorry last week, the hurricane came through Tampa. Hope everyone weathered it without too much damage. Luckily, I was only out of power 2 days and no real damage, but hopefully you guys are all, fully recovered from that, even if gas has been hard to find for vehicles. Anyway, so today's agenda. Yeah, we'll go through the market update. Earnings season has kicked off, so we'll update the outstanding earnings trades, and then we'll go through Joe's analysis at the end. So let's get started. So indices, SPX all the way down, the Dow still in state one, holding pretty strong. The pie pretty much flat week to week. But the state ones are above 45. So we'll go through that and look at, it pretty much dipped right to 45 and kind of turned around the past couple of days. So then sector overview, we got three in state two, um, consumer staples, healthcare and real estate. So overall, still pretty green overall. And let's just go into the market pulse here. So like I said, last week, um, just kind of been grinding higher. Um, so we were up around 53. That was a 52-week high for state ones. Came pretty much right to 45 and just turned around here. So if you look at state twos, they started climbing, from 5 to 15, 16. And then this past couple days, this, turned around pretty much on the 10th here and just kind of went back up. So down here we got the 40. So I haven't had a state one, state eight cross in quite a while. This one pretty much barely touched. So that's what is it, August? Before that, cross down was like June. So have been pretty strong overall for markets. This um, you can see, the twos just kind of just doing these little humps here and not getting follow throughs really on the fours much, and so just kind of been like that. So as far as new highs, new lows, still pretty much all. We got a little red pops here about this month ago, over a month ago, and since then it's just been, the lows, if you look at them, just been dead. They're, below 100 pretty much every single day and still getting the green pops. So, that gives us a good indicator, the markets are bullish right now and we're just seeing highs, and we still got 20% in state eight. So you can still make decent lows with that, but we got almost half of the issues we track in state one. You're going to see a lot of new highs. So that's kind of where we're at. As far as moving averages, things kind of, we're flipping back and forth here. All right, I had to let someone in. Beginning October, just kind of flipping, and then just, pretty much the 10th, everything went more bullish overall as far as like state modeling, moving averages, stuff like that. So 50s haven't crossed since over a month ago. That September movement. 200s are safe. So that's about it for there. Bullish, bearish. Just throw it up real quick. We had that up to 71, kind of came all the way down. Didn't really get close to the 50-50 cross. Usually, like when it starts here, it'll, go all the way to the cross, but it held here, and once again it's the 10th. Things just kind of held and held that above 60. It's kind of where it's right at now, and to see if it tracks higher. kind of like back here, things just kind of held and things just, kept grinding higher. So we'll see if that's how it, tracks. But I think the big thing, just following 20-day on the SPX kind of going to be key to that. So before we look at those, let's look at the modeling. So pretty much right on the average days. Um, this is below the average move, but we did hit above that um, right here. So, basically right above the average move. Not a typical pattern that we're used to, where we go up here and test and go up, but still made the average move, which is nice. Um, so from here, typically, maybe 20-30% will get above here, and then the rest kind of fall. So it's just like from noticing previous patterns and stuff like that, but not to say that, we're gonna retreat now. I'd once again kind of follow that 20-day and then the new level 58. So we did close. Now, obviously, these were all-time high the other day, 58.71. So, the bottom of the previous range was 5,400. So now if we can stay above, 5,800, that would be the new bottom of the range. So it's only been, 2 days, we're in our third day here. So um, let's see if we can hold that level, the 5,800, then the top of that would be 62. But we'll have to wait and see if we can hold that in the next few days. That's kind of it for there. Let's look at the charts. So, since that September movement, we've held the 20 the whole time. So we kind of got back here, 2, 3, 4, 7, 8, 9, 10. We've been holding the 20. So really it's that 20 is kind of the key. Can we hold that? It's currently 57.36 as of yesterday. So that's kind of what I'd be watching. See if we stay above 58, and then below that we got um the 20-day, which is 57.36. And obviously at top, we got our target 3, which is usually very tough to break through. But if it can and it turns it into support, then it can really run. So, that's top side. I'd be watching closely, getting above that and closing above 58. Let's just call it 58.80. So that's kind of your ranges you want to be watching here. But, as far as market pulse, things are greenish, for here. And I think the key, just tracking this 20 and staying above that. Even if we dip below 58, holding that 20 is the key. All these run-ups that we've been watching, sometimes it's been like the 50, but, since, I don't know, let's go back. Really, it's since kind of November last year, it's been the 20, it's been the key. So that's what I'd be looking at for SPX. Let's take a look. So good old Russell, chugging along. So more of a typical stay one pattern, kind of, come down, back up, get into the average move, and then 20, 30 higher, the rest pull back. So pretty typical move. Top of the range 2,300, bottom 21. So, downside, you got the entry price 21.89. You also have kind of, every 100, so 2,200 would be another kind of support. And then you got your moving averages too. But the keys here are, pretty much touched target 1 here. So breaking through there and getting above 23 and closing, that would be a new range. If we can get above 2,300, you'd see the high is 2,300. It literally touched it, down here and just like shot lower big time. Sorry, the bottom chart here I'm looking at. We'll look at it on the chart. 22 days in, so another couple weeks. These are trading days, not calendar days. So about half the average move, and just see if we can get through that that first kind of resistance level, and then next up would be 2,300, 52-week highs, and then see if we can get up higher. But kind of where we're at there. Moving average wise, 50 is more important here. So we did hold that kind of same time. SPX is being tested on like 20. So we did have held to 50. So it's another one you can look at. That's currently at 2180. So right below entry price. I think that was 2189. So a lot in that range, 2200 down to 2180. A lot of support in that range. And then there's your high 52 week 2299.9984. So we got to fix the decimals here. And see if we can make a breakthrough. But right now the range is 21, and I'll just do quick lines here. There's your 21, and then there's your top 23. So, and then this range kind of dips out a little bit, but came right back in. So it's pretty constructive. And if, Joe presented those future earnings. If those hold true, the Russell could do well going forward. But right now, kind of the little bit of a headwind is the 10-year popped up basically a quarter point. It was tracking there for a while at 375, and then just back here beginning of the month, now it's up around 4. So not, I think, a huge headwind. Like once we get over 4.5, my opinion is they're very negative, but I still think this is okay. It's not going to be like a huge headwind to the markets, but we'll see how that goes. But speaking of rates, 3 weeks out, the next meeting, big changes since our last meeting 2 weeks ago. So we're currently at 475 to 5. So now it's pretty much 94% for a quarter cut next. And then, that from, a month ago, we had 50, was that like 30%. So big movements in this, so now just kind of guessing a quarter. We don't really have much readings coming in the next 2 weeks. So I wouldn't expect this to be as a lot of fluctuations on this right now, but wait and see. If we go out end of year, once again, big movements. Look, this would be 2 quarters, so that'd be 50 basis point cut total. So there's nothing below that now. These go from, this was 20% a month ago. That'd be another full percent cut. And this was 44, that would be 75 cut. Those are both 0 now. So less cuts is what they're expecting. And that's been a big move, and it hadn't really hurt the markets any. So, but that's kind of where that's at. So it's been a lot of movement there, and then our good old balance sheet still at about, just hanging right above that 7 trillion. Maybe by the election it'll cross, but yeah, definitely slowed down overall, like their pace of cutting. So if you track it like here, it should be, we should be down here somewhere, I would guess. But Yeah, so less cuts is more bullish, less tightening is more bullish, and rates coming down is bullish, and typically, unless something breaks in the economy, that's always the disclaimer. But from the bank earnings that we've seen the past, a week or so, it's been strong. There's been some misses, ASML, I think, UNH, but you always have those kind of miss, some companies are going to miss, but overall banks were strong, which is a good sign. Someone, okay. So that's kind of where we're at. A couple quick ones. Earnings. So this from Bank of America. Magnificent seven versus the other 493 of S&P 500. So you can see here, it's been, like last quarter was all right, but next quarter, pretty much nothing for anyone except for Magnificent Seven. And those have, kind of come down a little bit. Expectations slow, but after that, pretty much looks pretty stable. And then the other companies, I guess it's just the down quarter for them for uh, the next quarter here. So we'll see. And the other one, this is buybacks. I mean,
Go
this is a
back to
lot of,
that last
yep.
chart,
Mm-hmm.
please. Why does it not? It has first and third, first and third.
Mm-hmm.
The quarters are 1Q, 3Q, 1Q, 3Q. It's not 1, 2, 3, 4. Why is?
Oh, yeah, that's a good point. Maybe it's just like this is one, this is two, this is three,
Oh, they
four,
just didn't have
five.
room for the
Yeah.
labels.
Yeah.
Okay.
Mhm.
Hmm. Interesting.
Yeah. Joe's our earnings expert, so if he has more, he can elaborate on that. That's another tailwind for the markets. I mean, just buybacks, companies buying back their company. You can just see since 2011, a pretty much nice little trend line, outside of COVID. This is when they should have been buying back the most. 20, like, come on, like they could have saved all this and, like right here, just like loaded up, it's bought back a lot cheaper. Anyway, hindsight's 2020, right? But overall, just, stronger and stronger, buybacks overall. That's for, I don't know the actual list, but this I think it's just the total market by everything in the U.S. market, all the buyback. So it's another tailwind to keep buying it back. So that was it. Market wise, open up to questions, comments, and I'm upset Yahoo changed their page. I'm not liking it. So I'm maybe looking elsewhere. Just fill up your whole space with like news. Instead of like the market up here and then your quotes and then uh, anyway, questions, comments on the market.
Yeah, this is Dave. I got a comment on your buybacks there. It'd be interesting to superimpose like buybacks against earnings and see how, see if they're like uh, correlation or not there. It'd be maybe Joe can weigh in on that. I don't know. I never looked at that, but I've been thinking about it for the last couple days.
Hmm. Well, I mean, if they're reducing shares and they keep the same profit, their EPS will go up because there's less shares because it's earnings per share. So it definitely helps. But if they're growing profits and shrinking shares, it's probably the optimal, you know, as far as like improvements in EPS.
Well, yeah, I know that, but it's still kind of a question. It's like, okay, if you're and it kind of depends on the company too, I guess.
Yeah.
Uh, if you're if you're in a good spot and and you have excess cash and you can expand, why not do that instead of buy back shares? You're not pressing your advantage, so to speak. So, but anyway, it'd be interesting to see that. Maybe I'll talk to Joe offline on that. Anyway,
Yeah.
thanks.
Mhm. Okay, anyone else? Questions, comments? Okay, let's go through earnings stuff. Okay, so so far had some bullish pre-runners. You know, so far so good. We got XOM just popped in on the 9th. So when we have till the end of the month basically. Yeah, the oil dropped big yesterday, but I think as overreaction to some misinformation on Israel attacking Iran's oil fields. Um, so the close, so far 3 for 3 on close. They all hit their 25% profit target. So it's been a good start. Let's just hope it keeps going. And then we got one else open. All rise. This is XPO down a little. We got once again near the end of the month before we had to close that one out. And then we had there was one this morning, Goldman bullish runner. So just open today. So is that just getting started? Any questions, comments on that?
Looks good so far.
Yeah, so far.
A lot of
People are
the notices I've seen, I think about half had estimated earnings, so I didn't enter them.
Yeah, I know. Yeah, it's been quite a few. Like I tracked this snapshots.
Yeah,
Yeah, it's just let me see. Yeah, the first couple. This would have been a good one too. Um, I didn't track Hess, but 3, 4, 5, 6, 7. Yeah, it's just a lot. And
yeah,
they just don't and I check them on Yahoo and they don't have it either. So it's just I don't nothing we can do about
yeah. There's
that.
nothing you can do.
Yeah. So
But otherwise, it's been fine. The confirmed ones I've been trading.
hmm. Yep, so far so good. Thanks, Sadir, and thanks, Dave, too. Anyone else for give the show to Joe? All right, Joe, you're up.
All right, Josh. And yeah, just everybody who had to endure the storms. Hope it wasn't too bad for you, because with back-to-backers like that, that's really unfair. I hope not too much disruption for everybody. Josh, as he said, he had to move out for a few days. Ashok and his family, they had to move out for a few days. So a lot of disruption down there. So I hope everybody's doing okay.
Yeah, Joe, that's the first one I've ever, I've been through a ton of these. That's the first one I was like, I'm getting out of town for this one. I just, I'm like, it's a direct hit. I've never seen one come across the Gulf like that. It's like, this is coming right for, because I'm south, of Tampa, almost between Bradenton and Tampa. So it wasn't worth it for me. So, but got lucky. Nothing big damage wise.
Where did you go?
The only hotels really reasonable ones I could find were Jacksonville.
Uh,
So I drove up to Jacksonville, and the crazy thing was there was no gas on 70, like going up north. Like luckily, going, I had like 3/4 of tank, so I made it. Once I was within like 30 miles of Jacksonville, I could get gas, but there was nothing on the way up and nothing on the way back because I came back Thursday, and there was no. I filled up before I came. Left Jacksonville. And there's no gas. There was no gas here even until kind of like over the weekend. There's nothing. Maybe one was open and it's like a 2-mile line. So it's pretty crazy. Like all the power was out here, and I got power back Saturday morning. So it's like 2 days without power after I got back.
Well, I'm
It's a
glad
mess.
you're all right.
Yeah, it's a mess, man. They're still cleaning up, like over in St. Pete. It's just big trees have come down. Yeah, and then there's all those tornadoes. So it's pretty crazy. And there's another one in the Atlantic. Better not come in the Gulf.
Hopefully it stays over there. Yes, and,
Yeah.
and dissipates.
Yeah, yeah. Go hit Jacksonville. It's their turn.
Well, we're a day shy of 3 weeks out from the election. I just thought I'd run a couple numbers. And I went back to the AAII Sentiment Index and just ran a couple numbers. So the last 4 presidential elections, if we go from election day to the end of the year, 2008, we all remember 2008 financial crisis. Market and market, when I talk market, I'm talking S&P, was down 5% from election day, 2008 to the end of the year. In 2012, the markets were essentially flat. And then 2016, markets ran about 7% from election day to the end of the year. And in 20, best performance of the 4, up 8.5%. So I went back, I pulled a couple numbers from the sentiment index, and at least the last, and actually I went back, I didn't copy and paste and throw up 12 and 08 for the actual bullish, neutral, and bearish numbers, but it was especially in 16 and 20 where and it makes sense. A lot of people from a sentiment standpoint kind of go into the election neutral, and then that number shrinks. Basically, the election in 2016 was on November 3rd. In 2020, it was maybe the 7th. But, the neutral, and basically coming into 16, there was, here we are right in here, the bullish, sentiment was very low. Majority was neutral, and you had a fair amount of bearish. But, you get down in the mid-20s, that's pretty darn low. Significant drop, jump in bullishness, once the election results were in 2016. You had significant drop in neutral, which is what you saw in 2020 as well. Here we are basically we weren't nearly as bearish from a sentiment standpoint, in the high 30s, but get those results out of the way, at least, the markets thought they had, and up and away to, bullish figures up north of 55. You can see the neutral sentiment drops significantly. So, in 2020, we got the 8.5% rally. In 16, it was about 7%. And, right now, basically, last week's numbers, we were 49% bullish, 30% neutral, and 20% bearish. So a low bearish number. I think that neutral number probably continues to expand as we get into the election, and then let's try to get through it. So, just a little bit, from a sentiment standpoint, investor-wise, that I'd pull up. And then not too big. One thing that caught my eye yesterday, back into 73 state ones, we're starting to build out a little bit. Josh laid out, a lot of the green, bullish stuff that's going on in the markets. But I thought, given the positive nature of everything, we had that announcement yesterday, and you get your one-offs. But this ASML, I didn't realize it was a Dutch company. But it was down pretty hard. So I thought I'd spend a little time going through, the semis. Obviously they were leadership right up into the July period, and then a lot have rolled over since, but, many are still quite constructive. I'm doing a little homework today on the ASML, and I'm not sure if any of you looked at it. I mean, their results versus expectations were just, ridiculous. They were, looking for, like $5.5 billion in revenue, in euro revenues, and got about half that. So it was a, really ridiculous miss. And then the forward look for next year, they shrunk fairly significantly. They were looking for, I guess, 40 billion in sales next year. They're in the 30 to 35 range now. So I don't think, you don't get misses that big that often. I didn't think so. I just thought I'd pull up, the charts, in the SMH, just to see kind of where this is. Could this be, an excuse for the market to really start to roll over? Personally, I don't believe that's the case, but, sure everybody's got their own opinions about that. And, when I pulled up and I was trying to get I got the 5-year charts and all these things just for perspective. And so, we rolled into a state 8, after the move yesterday, but, we can shrink this down. When I looked at the 5-year chart, I was like, right up in here, well, there must be some data missing. And then, lo and behold, it was like, damn, there's no data missing. That was the last earnings. And so it just, I didn't follow it all, back in July. But as it turns out, July, I think it was the 15th, was that reversal day, where the Russell rallied 3% and the NASDAQ was down almost 3%. And then, a couple of days after that, you got this. But it just, from a platform standpoint, there's so much that can be done, and a lot of these things are pre-programmed. There are actually so many in there. It's overwhelming, but, tracking stock moves, gaps up or down on previous quarter's earnings, and then having them come back to you can be, an awful good watch list. And I just was floored to see this gap on last quarter's earnings, and then you get the same thing again, yesterday. So, and the earnings, by the way, came out a day early. One day, we're still working on the behind the scenes stuff, and hopefully first quarter 25, we've got everything where we want it. But, one of the things, and it's been well over a year, we've got all the earnings days. And I know, Josh, you guys were talking a little bit about estimated, versus confirmed. With all the data we have, we can, it may not be exactly the right day, but we've got the data to pinpoint within, 2-3 days, all these earnings. And that's just something that it's on Josh and my, to-do list. We're just trying to get other things done, but hopefully we will refine that and, be able to give people a little more confidence with these non-confirmed dates. So anyway, the ASML just really shocked me with that previous gap on earnings. So anyway, SMH, got a move yesterday, and, we're still state 1 in SMH. There's the 5-year. So, as I've said over the last couple of meetings, obviously we didn't have one last week, but a lot of these charts are still in, great position. We had the big pullback from mid-July to August, especially in this group. And, so much of it now is just kind of back and fill. SMH, basically it's NVIDIA at 21%, Taiwan Semi at 12%, Broadcom at 8%, AMD at 5%, ASML is also 5%, AMAT 4.5%, Qualcomm 4 and change, Texas Instruments and Micron at 4%. So, and most of these stocks, with the exception of ASML, are flat to up today. after some of them getting beat up a little bit yesterday. AMAT's down 2%, and ASML is, getting hit today again, I think another 6% or so. But I just, like I said, I thought here's NVIDIA, all right? And lo and behold, look at that. We get up to target 1, pretty close to the all-time high. And, down it goes on, sympathy in the group. Let me shrink this a little bit. There's the longer term chart. Their earnings, let's see, NVIDIA is after the election on the 19th of November, so, I think the whole days of it's an NVIDIA market are behind us, but guessing that they're going to have some rear end kicking earnings, and we'll see if the stock can make an all-time high after that. So there's NVIDIA. Next is Taiwan Semi, and their earnings are soon. Let me just, what's it say?
17th.
Yeah, the 17th. And I was looking. I didn't find that confirmed somewhere else. It's got it confirmed here. Anyway, I couldn't find the number actually in what they're looking for, but they're looking for a monster gain at 40% increase in earnings. So that's one, to keep an eye on in terms of short-term momentum, I think, in the market. If somehow they disappoint, and I didn't, their last earnings was, back in the same period where that whole group was rolling over with, the unwind between Russell and the techs. I think that's an important one to keep an eye on. And, here we are right up into the target ranges. Next was Broadcom. And, so many of these have been constructive, trading right up into the target areas, still have time for the most part, most of them, in terms of average state one percentages, but not much that you can complain about, with a stock like this. And, it's true of really most of these. AMD makes up, 5% of the index, a little softer from a target percentage, but still very constructive. And, this was one that really has backed off rather considerably, off of the April lows as opposed to the July. So you've had consecutive lower highs in this one. Dave, I know you follow this group very closely. It'll be interesting to see whether, this thing can solidify between the August lows and, any further down move. AMAT's next. Again, AMAT is about 4.5%. The stock is down today. In this one, maybe, backing and filling, maybe a little more vulnerable, but shorten that up a little bit, way off those July highs. Qualcomm. I'm not sure if anybody trades any of these. I have not, kind of been flatlining since the August lows. So, there are a few of these stocks that seem to be a little bit vulnerable. Let's see, the Qualcomm, their earnings are November 6th. The only other one that's coming up is, in addition to TSM, is Texas Instruments. The rest of them are out after the election. These couple that are flatlining come earnings time, will be interesting to see whether, that's something that's going to give them new life, or whether they're going to, find new lows or just stay in these ranges. Texas Instruments next, had a good run, but, flat line, going sideways. So, I guess really a lot of these, it's going to come down. Basically some of the multiples obviously have been taken out since the July periods. And so the focus is, what have you done for me lately? David, as you pointed out a while back, these guys had earnings, took everything up again. And, pretty decent trading range in MU at this point. And then I just thought I'd pull up NDX just because, obviously tech heavy, trading near the highs. There's the 5-year chart, shrinking that a little bit. We'll see whether, we're going to do some more backing and filling. But, just pretty remarkable right up here to the target levels, and, back and fill we do. So last one, as Josh pointed out, was, not a bad thing with the markets when the financials are doing well. And, it has been a hell of a run. A lot of these guys came out beating earnings by a solid, 10%. At least Wells Fargo, JP Morgan, those guys were beaten by 10. And yeah, as Josh said, never a bad thing for the financials to be leading the market. So I just thought I'd pull that guy up as well. And, be very constructive for just the back and fill to the top of target 3 and go again. So as Josh pointed out, lots of earnings coming up. We do have, fair number of stats coming out, tomorrow and Friday. Friday, it's a couple housing numbers. Tomorrow, all kinds of stuff, a little bit of housing, industrial production, jobless claims, retail sales. So I'm not sure that they're big market movers, but, lots of stuff coming out. And then it's quiet next week till next Thursday when we get into PMI numbers. So the betting markets, as you may or may not be seeing, are moving significantly towards the Republican candidate. So 3 weeks to go. Who knows? Who knows? But it'll, I think, be good for the markets to get this behind us, and hopefully we will count the votes quickly. So happy to take any comments or questions.
Yeah, Joe, this is David. I want to comment there on the semis. It wasn't that long ago when Intel was the 2,000-pound gorilla in the whole group. It's amazing how things change in a relatively short period of time. One would be interesting to watch to see how the semis that are expanding with the money from the CHIPS Act, or developing or creating product onshore, how they're going to do compared to the rest of the ETF, if you will, in the future. You did mention, you didn't show a chart for Intel, which is on the negative side of all the really nice semiconductor charts, other than Intel. And TXN is sort of chart, treading water, like you said. So I don't wonder how long it takes for the policy money to actually affect the companies that are in the segments. I kind of like put time markers on the charts of when the policies happen, and it's quite a while of a lag when you're building out. CapEx money has to be taken into account for, and that's what a lot of Wall Street doesn't like. When companies are spending a lot of CapEx, they immediately downgrade the stocks for the most part. So we'll see how that plays out. But I kind of am in favor of the semis that are expanding onshore. That's my favorite group to watch.
And Dave, I know you have helped to keep us educated on a lot of this, in the past. Is Intel the largest beneficiary, do you know, of the CHIPS Act? Yeah,
it was definitely Intel by a wide margin.
That's what I thought. Yeah,
I mean, it's like a tenfold kind of difference. They were the biggest, right? So they were the only ones one of the few that was actually had onshore manufacturing to start with. Micron is one of the other ones. A lot of the chip designers don't have any fabs, so that's another market differentiator between one semiconductor and the other. The chip designers, they don't have the overhead, so That's why Wall Street kind of loves those guys the most, or hates them if they have a bad quarter. So,
Well,
the Qualcomm kind of thing, that was a newsy thing. When their stock was going up, they were talking about buying Intel, or at least buying the fabs from Intel. Intel was talking about spinning that group off. So that's some interesting news to watch too as that unfolds. They just announced, Qualcomm that is, they just announced they're going to put that decision off to whether they're going to increase the focus on buying the Intel assets or not until after the election, which I thought was interesting because the CHIPS Act was actually a bipartisan bill. So it wasn't Dems versus Republicans there. It was one of the few bipartisan bills that got passed. So we'll have to see. But I'm encouraged by the whole group going forward. So we'll see.
well, there are, those charts, I think, tell the picture of a lot of what you're talking about. Some of them, you got the higher highs, and then others flatline, and then, there are a few with the lower lows. And, it's, I guess, all about getting into the weeds. And honestly, the Intel chart, I mean, it's to me such classic Wall Street. I mean, the timing, wasn't it really the end of last year, beginning of this year, where Intel going to get all this money, and then they chop the stock. They just destroy the stock. After obviously a lot of people were just piling in based on the free money. So it'll be interesting to see when it finally turns around.
Intel's position is pretty unique because it's fab versus their CPU x86 long-term chipset that they designed, right? So it's pretty unique because not too many other semiconductors actually manufacture or have fabs. So Intel's a nice, interesting story, and I think it's going to be a long-term investment kind of thing. And now it might be if you're like 20 or 30 years old, might be time to start building positions in Intel. But you said it, Wall Street whacks them around pretty good. If they don't like them, they can drop your price targets in a hurry. So,
yep. Well, thank you, Dave. Anybody else? All right, Josh.
Yeah. All right. Thanks, Joe. We'll wrap it up here and do it again next week. Thank you all for tuning in.
Thank you.
Have a good week, everybody.